PREIshare is the latest startup in the real estate syndication space.
Our mission is to create transparency, provide liquidity, and offer market intelligence that can help you succeed at a higher level.
To get involved, join our PREIshare sponsored Facebook group.
Together, we can raise the standard. Hey, what's up, everybody? Welcome to today's live video. And if you were watching and you saw the notifications for this tomorrow, well, that was just a little technical difficulty on our end. So we're coming to you today and really wanted to just talk to you about the fund itself. So with PREIshare, if you've been paying attention to what we're doing, when you boil it down with the show that we're creating, with all that we're doing for sponsors and for passive investors, when it really comes down to it, what PREIshare is doing, the engine that runs it, is the fund. And so the fund is now ready to launch, and we're having conversations with some amazing people. And you know, we do have some rules in there so that we don't get over leveraged by any one individual in their ownership of the fund. And you know, so that has put us in a place where we have to work with a specific type of individual. And I kind of wanted to just go over some details about the fund. Now, the one thing about it is, if you are going to invest in the PREIshare fund, you must be an accredited investor. So we are a 506c offering. And so you're going to need to get more details than what we're sharing here. And you're going to need to go through the proper process to just make sure that you are an accredited investor. But what I wanted to do is actually share some slides from a couple of, I pulled them from a couple of different places. I just want to talk about what we're doing with PREIshare, help you understand what we have going on. So let me go ahead and share my screen real quick. All right. We're calling it the Real Estate Liquidity Fund because that's really what it is. It is about the liquidity factor, the liquidity that we're giving to passive investors, but also the liquidity to our investors inside of the fund. And what it really comes down to is, usually there has been the passive investor, the people who have funds that want to put money into good transactions that they don't have to go and run and operate, right? Most of those folks are not necessarily wanting to go do the work. They just want to get a return on their money. And then there's the sponsors. These are the guys that are going out there and transacting the deals. They're finding the properties. And at some point in time, when you're out there investing in real estate, you get to the point where you realize, you know what? I don't have enough funds of my own to do this deal. And it's going to, you know, be very expensive and difficult to try to use only bank funds along with my own. And quite frankly, you might even get to the point where I just don't have enough family and friends either, because I want to go big. I want to take this to the next level. And that's when you start doing syndications. I mean, really, as soon as you start adding other people's money into the deal and they are relying on you to operate the transaction and they don't have a vote or a say, you're now in a syndication. And technically, it would be considered a security unless you have certain exemptions. So we're not going to go into all those details. There's actually some really cool videos that we've done that help you understand that. But there's never really been the person that's in the middle. The company or entity that says, we want to align the interests of the passive investors and the real estate syndicators. We want to help both sides, and we want to have more communication in between them and solve some of the issues that come with those different scenarios. Now, some of the things that this leads us to with the overall model of dynamic re-leveraging in real estate is, it gives us the opportunity for opportunistic returns, short cycle investing, and the ability to continue to reinvest. So when we come back here, what are we doing? We're a trusted source for passive investors to liquidate their passive investments. So that means you've invested in somebody else's syndication and you've decided that you want to get your money out prior to the agreed upon time frame, which could be 5 years, could be 10 years, you know, whatever it is, you need your money out early. So we want to be able to give you the liquidity through the fund where we can buy those interests. Now, on a side note to that, we're also creating a listing hub. So if you don't like our offer, you can put it out there to the open marketplace. But overall, as far as a fund is concerned, we're going to be buying those passive interests. We're also going to meet the short-term needs of the sponsors when they're at their most crucial times. And so that comes in the top-off services. So if you're out there doing a raise and those folks need money to get to closing, and maybe they had an investor back out last minute, they need that extra couple $100,000. And if they don't get it, they lose their earnest money, which could be $50,000 or $500,000 for that matter. We want to make sure you have access to funds to close the deal, and then we will actually help you backfill out those funds and go promote you to help you go out there and build your investor list. The other time that we come in with pref equity is when you're at a crucial time where you might be facing a cash call, but the overall transaction of the deal is still working well. There's just something that's changed. You either need more money to remediate the property, or CapEx that you didn't expect, or it might be that you just need to bring your ratios in line for a bank refinance. Whatever it is, same scenario. We can bring in the funds that you need, so you're not doing a cash call to those passive investors, and you're not putting them in a bind, because we all know that being asked for money at times when you didn't expect it is not necessarily a comfortable situation. And we understand it's going to happen out there, but we want to mitigate and we want to be a source so that it doesn't have to happen in many scenarios. And so those are the ways that we create win-win scenarios for both the syndicator and the passive investor. And that gives us this idea of dynamic re-leveraging. And so I'm just going to propose a question to you guys. And I can't see the chat, so hopefully we've got somebody else watching the chats. And I'm just going to throw this out there, and I'm not going to wait to get responses. But let's say that I wanted to borrow $10 from you. Okay, for some reason, I don't have money for lunch. And I say, I'll tell you what, you pay for my lunch today, it's $10, and I'll give you $12 in a month. Or if you want to just let it ride, I'll give you $20 in a year from now. And you say, you know what, let's take that $20 in a year from now. That sounds really good. I say, great. Then you're essentially going to get one bump. And I'm going to show you a graph of this here in a minute. But let's say that you say, you know what, I'll take the $12. And I know that if I can find one person to do that in a month, I could probably find one to do that every single month. So instead of just lending your $10 out and getting $20 back in a year, which pretty good return, right? You're going to lend it out, and then you're going to get it back, and you're going to lend it out again. You're going to get it back. That is where you start getting the re-leveraging. But where it really gets ideal, and this is where I'll pull up the graph, is when you realize that at a certain point in time, if you're borrowing that money out on a monthly basis and you're collecting it back the next month, at a certain point in time, you're going to have $20. So you'll be able to do it twice. So you can borrow $20 out to two different individuals and collect $24 back. Sorry, all the math in my head going real fast, right? You get $24 back, and then you continue to do that until you get to the point where you have $30, and you continue forward. And as you can see here with the graphs, your rates of return, your overall return, I should say, is much, much higher by dynamically re-leveraging your investment. And this is what PREIshare is built on. This is the whole idea behind this, is that we are short cycle investing, helping out at crucial times and being able to make things happen. The other thing that really makes us unique and why investing with us in the fund rather than somebody else's singular deal or going out there and putting into the stock market or whatever it is we have one of the most diversified funds that there will be when it comes to real estate. We're going to be diversified across geographies. We're going to have sponsors from all over the country, possibly even internationally. We can talk about that later, but definitely across the country. We're already talking to people in Florida, New York, Utah, Arizona, and on and on and on. So you're going to have that geographic diversity. So one hard economic challenge in one part of the country is not going to affect the overall portfolio, right? You're also going to have asset class diversity because all these sponsors are doing different types of deals. We have guys right now that are doing multifamily. We have guys that are doing self-storage. I'm thinking about all the different asset classes, and my mind's working faster than my mouth. But there's all kinds of different asset classes out there. I mean, we're looking at people that are doing trailer parks and all kinds of different scenarios. Office space and converting it into residential space and all kinds of things. So you're going to be diversified across the different asset classes, and then on top of that, you're also going to be diversified across different investors and sponsors. And so we have people that are individuals and they're out there and they're doing, 50 or 100 or 200 units at a time. And it's just them and maybe a very small team. But then we also have those very big individuals that are already, running $500 million or $800 million in assets under management. And they might have a staff of 50 or 100 or more. So you get that diversification. There's even folks that are coming to us now that are already privatized. They're very large corporations, but they're looking at the ability that we can actually buy out their passive investors that want to get out early. So it's very diverse across the board. If you look at our team, I'm not going to go into detail of everybody, but overall, between our team, there's been $7.3 billion in transactions, over $1 billion in assets under management at one time, consecutively. 25 years real estate securities legal experience, and between all of us, over 100 collective years of real estate investing experience. So I just went through the basics. This is not enough for you to make a decision, obviously, but I just want to start getting the word out. And I want you to think about this. If you are not a passive investor, you've probably been watching what we're doing because that's why you're watching us now. And maybe you've been saying, man, I'd really like to get involved in this. I love what these guys are doing. I want to help in some way. Well, we're looking for passive investors right now. We are looking for people that want to invest into the fund. And it's typically going to be a minimum commitment of $500,000. Okay. The cool part about this, though, and we can get into these details later, is if you commit to $500,000, you're only going to put 10% in immediately. And then on a quarterly basis, we're going to essentially send out requests, and you'll be able to see the types of deals that we're doing, and you can vote with your checkbook of whether you want to continue to participate. Now, if you don't participate in one quarter, somebody else may take your spot within the fund of how much you could invest on the next round. So that's why you want to stay invested if you like what we're doing and continually get those gains. If you understood that graph that I was showing you, the best thing that you can do here is put the money in, reinvest the gains as you go, and take every opportunity to continue to grow this portfolio as we go out there and help you get incredible returns. If you want to know more about what we're doing, go to PREIshare.com/get invested. And I'd love to chat with you guys. Thanks.